Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 3rd of June. So with Mexico joining the trade tariff or the threat of trade tariffs last week, the concern is that the global trade tariff sort of situation extends into a longer term issue, and that's had traders running into more safe haven assets towards the tail end of last week. Now this week, or the beginning of this week, the concerns still seem to be there, and we still see a move favouring those more risk-off approach markets. So if we take a look at a few markets here that we're focusing on in the trading room, all of these, if we look at the US indices first of all, now all of the US indices, the NASDAQ, the S&P 500 and the Dow Jones, they've all had significant moves to the short side last week. And in fact, all of these now are looking decisively short across these higher time frame trends. And we've got well-structured trends now forming. Now, our pick out of the three this week is the NASDAQ. And the reason being is that the NASDAQ has recently broken through an important neckline here on the weekly chart. Now, just below that neckline is the 7,000 level, and that's a very key psychological level for NASDAQ traders. And then below that, we've got another sort of structure point around the sort of 6,500 to 6,600 area. And there doesn't look to be an awful lot in the way, on these higher time frames. So if we take a look at this on the daily chart, we can see the well-structured short trend at this moment in time. We can see we've got about 100 pips down towards that 7,000 level at the moment, and then below that, just above that sort of around that sort of 6,600 level, is another sort of point here where we've got some significant support and resistance. So, and that's quite a huge distance to the short side. So we've got some very decent sized trading windows on this market. Now, indeed, all of these US indices at the moment have opened up with significant gaps to the short side. You can see the gap here on the NASDAQ, and in fact, we've got the same type of gap on the Dow Jones and also the S&Ps. So with all of these timeframes looking a bit stretched at the moment, what we're sort of favouring is a bit of patience to see if we can actually get a gap close, maybe in the Globex session overnight. It may protract over the next sort of couple of trading sessions, but if we can get a bit of a more value entry, that would be our preferably if we could get a gap close as well, and that would sort of bring the market back in towards those moving averages there on the 4-hour time frame. Now, if we take a look at, again, the same sort of risk-off approach markets, we may well come to precious metals. Before we take a look at silver, let's take a look at gold. Gold has had a very significant move here. It's taken out several key levels, so the 1.300 level, the 1.315, and now the market's just kicked the 1.320 level, which are all significant trading points on this market. Now, the trouble is gold is that it's had such a strong fundamental move, it's been very difficult to get sort of positioned in here. Whereas silver, which is its sort of counterpart and also very correlated, has been a bit of a lagger here. Now, silver is our sort of preferred market this week, and the reason being is it looks more tradable compared with chart structure compared to gold at this moment in time. If we look at silver on the daily, we can see that it's recently taken out a significant price point here around the 1450 to 1460 level. This has been a point of significant support and resistance. The market's above there now, sort of making a higher high on the daily chart. But again, if we take a look at this on the 4-hour, we can see that we've now got a well-structured trend on the 4-hour time frame, and the market's just pulled back in, tested the level here at 1457, which is where I have it marked in, and now pushing again to the long side. Now, if this continues and we see continued money being pushed into precious metals, we're likely to see higher prices in silver, and with silver, well, we've got plenty of distance to the long side here above price, and it's also got time to catch up with its sister being gold. So keeping the same theme here and moving into currency markets, we might start to look at yen markets. Now, yen is one of the risk-off approach. It's a safe haven asset, and we've seen here that the dollar yen has had a significant move to the short side. It's resisted the break for quite some time, whereas because of the strength of the dollar, but now the stronger yen has prevailed, and we've seen this move here to the short side. Now, if we take a look at this on the weekly, we can see that the market's now come down to, and it's just above a very key level on the weekly chart. So that's the 108 price point. You can see that that's a very significant price point for many years. And just underneath there doesn't look to be an awful lot in the way down towards that 106 area. So there's a significant sort of trading window underneath a break of that 108 level. Now, also, if we look at the action for the past couple of weeks, we've had significant weak action over the past couple of weeks, meaning that there's not many areas here for traders to be getting long. You know, there's not many good places for stop locations, only really sort of underneath where price is at the moment. So what I'm favoring at the moment is, if the market took out the 108 level, I'm looking at sort of shorting opportunities underneath that, because that not only takes out the previous sort of the structure for the previous sort of couple of weeks, but it also takes out this this structure point and that significant level. Now, as with all of these markets, they've had a very good run last week, so some kind of sort of retracement, pulling price back into value areas is expected. We're seeing that we've got a bit of a retracement occurring now on the 4-hour time frame, so some sort of retracement, preferably maybe even back into the moving averages, maybe back into 108.50 could be nice areas to be looking for new sort of shorting opportunities. Certainly what we'll be looking at is technical areas and technical setups to the short side will be very keen to us here in the trading room on dollar yen. So there's a few markets there that we're keeping a close eye on in the trading room this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.